The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 16th, terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. And I believe we should always be pioneers of our future versus prisoners of our past. And as we begin our day, let's remember that the things that you and I, the things that we truly love to do, our real passion for life, they last for a lifetime. But for many, those talents go untapped. That reminds me of a story that was once told by Mark Twain. Maybe you've heard this story too. It goes like this. He told the story of a man that had died, and upon entering the pearly gates, he said to St. Peter, he said, St. Peter, my real passion is military history. Can you tell me who's the greatest general of all time? St. Peter's looked, he said, that's easy. It's that lad standing right over there. The man looked and he said, St. Peter, that can't be. I know that man. I knew that man on earth, and he was just a general laborer. Then, of course, St. Peter, he replied, that's right, my friend. He would have been the greatest general of all time if he had been a general. Something to think about. Folks, what I want you to remember is life happens for us, not to us. And when you and I we can make that small little shift, that small little change, it means we can find the greatness in every set of circumstances that happen to us. Is the glass half empty or is that glass half full? I will tell you, that glass is always half full. And I want to tell you as well, that I am grateful for your presence here today. So remember, I am absolutely here to serve you. That means you can give me a call at 877-927-6648. Internationally, 727-445-1044. Maybe you've got a story that you'd like to share with others. I know folks would love to hear from you. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures off about 40 points. Off of their session low. Of course, well from their session high as well. They're trading out at 17,151. S&P futures down about 1/3% off 6 points, trading out at 1983. NASDAQ futures off 23 points, trading at 4140. Gold is up $5 right now. Big, huge move inside the U.S. dollar index back 717 ticks. Gold's not moving out there. Kind of interesting. The euro, we've taken a look at the euro. We've watched the euro change its trend, its short-term trend. It's continuing that change. The actual pound is actually on the move this morning as well. So we'll take a look at the currency pairs. You've got silver off 20 cents right now, down 1%. That's trading out at 16.33. Light sweet crude off $1.31, trading at 54.60. I'm going to try to hold back the sneeze. I don't know if I can. Excuse me. I could not. Sorry about that. Excuse me. If I could do that Steve Martin, excuse me, that would be pretty fun, wouldn't it? So let's go take a look at the market here. Let's try to figure out what's going on. I think the best way to do this is let's start and take a look at the daily time frame first. So, in fact, look at the ES Mini is up on my screen. So let's take a look at the daily time frame for the ES Mini. It's always important to step back, take a look at a chart. In fact, the best thing to always do, let me do this here. If I say it's the best thing, why don't we do it? Best thing to always do is to always start with a clean chart. Right? When you start with a clean chart, what does this mean to you? The reality is a chart, for most people, may not have a ton of meaning. We're going to go ahead and add meaning. Now, the first thing that I'm going to do is I'm going to add and take a look. We're going to see where's price in relationship to just simply the natural Fibonacci retracement, right? So we start with a clean palette out here, a clean chart. So I'm going to just simply go ahead and add that to the chart out here. So I'll add my Fibonacci retracement. Now, what we can see is from low to high, what the ES Mini has done thus far is made a .382 retracement. That's 1977, and in essence, 1977 and a quarter would be the number. It says .39, but the ES Mini just trades in quarters, right? So it can't be .39. This is just simply using math. So remember, we're not using these for the exactness out here. So right around that 1977 level. What we've seen thus far today inside the ES Mini has moved down to 1968. Let me put this up here in the upper left-hand corner. So we've seen it move down to 1968 and a quarter. If 1977 fails, what we ought to see is price gravitate back to the 0.618 retracement level. Now remember, we take a look at these retracement numbers, 0.382, 0.618, 0.786 out there. They have a ton of meaning. They have so much meaning. If you just simply take that rubber band that's somewhere on your desk, where is my rubber band? That's a good question out here. I need to have my rubber band. There's my rubber band, right? You take this little guy right here. You take this rubber band, okay, and you wrap it around your finger as tight as you possibly can, like that, okay? You know, so that you start to see all the blood fill up. Actually, it's turning white on my side, I think. But you know, you wrap it as tight as you can, and you only back it off 38%, and you let it go, and you have a lot of energy. Do that same thing with that rubber band, wrap it around your finger, back it off 68%, and tell me what kind of energy you have. Which one has more energy? The 0.382. This is a critical area. Now, this is also a natural area. It's like an elevator, like if you were going into a building and you're going up to floors. We take a look at floors between price moves here, between major swing points. That's what we've got in place right now. The first level where people may get off that elevator is 0.382. So we'll see whether or not folks are getting off that. We're going to go dive down into some intraday charts to see if we can get any kind of a feel. Here's what I'll say. If there were to be a reversal, if this were to be a low, this would be the ultimate with regard to the A to B equals CD to the upside that it could form out there. I don't know if that's going to happen. I know that there's a seasonal pattern that has worked for the last 43 years. It says a low should have really come in on Friday last week. You got to give it a little bit of leeway out here. We'll see what happens. What I can also say is that regardless of that seasonal pattern out here, that if in fact this 1977 level fails, we ought to see price move down to about the 1914 area. Now, there's really no other tool that I can see at this moment here that would make that's going to really help us decorate this chart. That's going to give us any more information. You thought I was going to say any more better information, didn't you? But I didn't. I caught myself there. Now, let's go take a look at. Let's go from the daily chart. Let's go and take a look at a 30-minute chart out here. So on the 30-minute time frame, one of the things that we've got, one of the patterns that we're taking a look at, now this chart here is already decorated. If we take a look at the move that took place here at 12 noon yesterday, so as the ES Mini was getting down to a price level of 1981.50, the relative strength reading, well, let me see if I can put that on the chart out here for you. Give me a moment to put that box, data series, indicators, that's not it. Or is it right here? Show data box. There we go. Okay. Let me put that on my screen here. So as I take a look at, well, I guess I can't put it on my screen. Son of a gun. What the heck just happened there? All right. I'll have to skip that because it's stuck behind the... here's what I'll say. You can see this little line here. If you watch this on TigerTV, it's great because you get to see us in HD out here. And that's a beautiful thing. What I will tell you is at that point in time, during that 30-minute session that ended at 12 noon, and this was yesterday, December 15, that the RSI reading got down to its lowest level that we have seen here. Its lowest level during this little 30-minute cycle. Not a little, but during this 30... Since that point in time, we've seen that price actually move lower. What you did here, coming into the time frame of 7:30 this morning, we saw price get down to that 1968 and a quarter, and it was doing it with less energy to the downside. Now, that alone is not any kind of reversal signal. You see how my lines are drawn here? There's a very specific trading strategy that I use. It's not about moving down by a quarter, not by one tick out there. There's a whole strategy behind this. Now, part of that strategy, let me try to blow this up on my screen just a bit. I'll move this over here a little bit. What we can see is price had moved down here, that very next candle session, high wave candle. Now, what's that? Looks like a doji. Smells like a doji, but it isn't really a doji. High wave candles, the meaning behind those is that the market has lost its way. So now we know a couple of things. Number one, the market was moving down. It was moving down in price. It didn't have the same kind of energy behind that move as it did yesterday at 12 noon. Doesn't mean that it can't find that energy, but let's go with what it is that we know now. What happens on that next candle session out here? The candle session here coming in 8 o'clock. The market gives us a message that it lost its way. What happens during that next trading session, between 8 and 8:30? Hey, you all of a sudden see a bullish reversal signal. Now, here's what I can tell you about every single market for whatever time frame it is that you trade out there. The earliest possible time that the market can turn to an upside is when you see a bullish reversal signal. The earliest time that the market's going to turn to the downside is when you see a bearish reversal candle out there. You need to know your candles. It's like David Letterman. You need to know your cuts of beef out there. Without them, you're absolutely lost out there. Now, just because you see that reversal signal, that doesn't mean that's where price is going to find a bottom or a top. It's the earliest point in time that the market is giving you some kind of indication. Does that hopefully that makes sense to you when we take a look at that. Now, what do we see on that very next candle session? Well, what we saw here was we saw price move a bit lower. So it did not confirm what we saw during that last half hour. You like to have confirmation out here. It still is a morning star, which was also, by the way, named after one of Japan's great generals, Oda Nobunaga. We happen to have Oda. He's a member of our Tigers Den out here, and that's a beautiful thing. Now, just kind of tying in the Mark Twain story there. So, what does this mean as we speak right now? It means that the ES Mini is trying to form a bottom. Now, when the market opens here at 9:30, we'll see if there's a rush to the door. If there's a rush to the door and things move lower, we can take a look. Well, we identified some areas when we took a look at the daily chart, right? When we took a look at the daily chart out there, it gave us a target if this level here begins to fail, right? So we already know where price would likely travel to. Likewise, where's another area of resistance? If, in fact, we start to see buyers come in, short covering, whatever it is that's out there, where is it that we're likely to find resistance? So look at that blue line going across my screen out there. That's the line of demarcation. That's the line that'll tell you whether the bounce is more than a bounce or if it's just simply a bounce up to a resistance level. What is that price point? I'm glad you asked me. That price point is right around 1998.75. That's the number to be watching. If that level gets taken out with conviction, guess what? That says it's more than just a bounce. You get above 2016, that's this little black squiggly line going across my screen. That says that it's more than just conviction out there. So we've got the daily chart, only a 0.382 retracement. We got our little rubber band out here. Oh, I just broke my rubber band. That's okay. I can still put it back together. But we got a rubber band theory out there, and we've got a 30-minute chart that says, hey, I'm not certain if I want to go lower anymore. Hey, how about that? We finally got the tool back out of my screen. The heck with you. I'm going to close it out. Now, that was the 30-minute chart. Let's take a look at a 120-minute chart here for the ES Mini. What we know from the high, and the high, by the way, was out at the price point of 2,079. That took place at 12 noon as well. That was December the 5th. That was our A point of an A to B equals CD to the downside. Our B point out here, right here at the trading session at 12 noon. A lot of things happen at 12 noon. I would stay tuned at 12 noon today. You've got the low of 2,033 and a quarter. Makes a retracement. What kind of retracement? Only about a 60% retracement, 0.618. That works for us. And as we take a look at our A to B equals CD move, guess what? The 1 to 2 A to B equals CD move on the 120-minute chart comes in at 1969 and a quarter. And what was our low that we saw here? Well, it was at 1968 and a quarter, off by 1 point. Now, does that make it a reversal? No, but it's a 1 to 2 A to B equals CD. And if you owned your book, your copy of The Art of Timing the Trade, your ultimate trading mastery system, is that the correct name for the book? I think that it is. Guess what? You can get your copy. You can go sign up for the Gold Report, and you get a free autographed copy of that book. And that'll tell you when you do a 1 to 2 A to B equals CD, you're likely going to do something else. We'll see if that's what these markets want to do. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, I was tinkering with that rubber band that I broke during the break there. It actually works better, that technique of wrapping the rubber band around your finger if you break it in half. Things happen for us. They happen for us all the time. Now, speaking of just kind of what do I want to say? If we take a look at the NASDAQ futures, right now, NASDAQ futures are trading out at 41.34, so they're down about 30 points or so. The actual low so far this morning has been 41.13. It has not made it down to its 0.382 retracement. But if I go ahead and I put the four quadrants on my system out here, upper left is going to be the Russell 2000, upper right is the Dow futures, lower left is the S&P futures, lower right is the NASDAQ futures. What we'll see is we really have things kind of lining up here, meaning that each of them are at or near their 0.382 retracement. So it's really kind of clear. In fact, if we take a look at the patterns inside of the NQ as an example, if I go look at the 30-minute chart right now, we'll also see that price had moved down with less relative weakness and formed that same kind of a pattern out here, little bullish engulfing Morningstar pattern. So it says its support basically becomes the low that we've seen, the inter-session low out here. If that gets taken out, it's pretty simple. The price target, doesn't mean that's where it heads to, but the price target you ought to be looking at would be that 0.618 retracement. Again, that's nothing more than a natural move on any kind of a pullback of a large A to B, which has set up out there. Now, I have a request from Mike in our Tiger's Den. And folks, if you haven't test drove the Tiger's Den, come on over and do that. It's the best place. No, it's really always about peer groups out there. When you're trying to improve whatever it is that you're doing, always go find a peer group that is doing it better than you are. And there's nothing better than the Tiger's Den. I had a request to go take a look at Goldilocks. So let's go take a look at gold. We've got that's trading up $3 right now. Silver back 24 cents out here. As we take a look at gold, the question is, hey, what's gold doing? And that's an excellent question. So we're going to take a look at it from a couple different perspectives. First of all, I'm going to leave these lines that I have on my screen as we speak right now. And the lines that we're looking at trend lines. So the shorter-term trend line, that's the one that comes off of the high here from August 14th. That's my touch point. My next touch point out here is October 21st. That third touch point was that move up, what I considered to be more of a short covering rally than anything else. That was December the 1st out there. Price stopped right there. Really important trend line. Price coming back to test that trend line, no big deal. Price moving under that trend line, it is a big deal. Because typical price patterns, in the past would say it's absolutely a false break. Now, what took place overnight? What took place yesterday? As we came into the close, we saw gold close out at 1207.70. Inter-session, price had pushed down, it had slammed down, it had tested that market profile high out there, that resistance of 1198. It rejected that area. It closed back up above that yellow line. Where's gold trading right now? It's also trading above that yellow line. Here's the deal. If you're long, it's okay. If you see a close below 1198.90, I'm not talking 1198.80, but let's say you get a close below 1181 out there, pretty good chance that the breakout to the downside would be a false break. And maybe best to be neutral, not necessarily short, so to speak, but maybe not best to be long at that stage. And what you really want to see is gold get back above the longer-term trend line out here. That longer-term trend line, that's one coming off of the July 10th high as your touch point. You go ahead and use as your touch point out here from a trend standpoint, the August 14th high. And, that's how I would be looking at it. That's the message here of Goldilocks as we speak right now. If we go take a look at silver, silver is trading off about 26 pennies right now. She's trading at $16.29. If we look at its trend line out here, let me get rid of the Fibonacci number. Let me just do that there we go. And if we take a look at the trend line here inside of silver, here's what we know about silver at the moment. The pullback here on silver looks, hey, not too shabby, because price has pulled back in essence to that trend line, or very close to it. So silver, even though it's lower in price than gold, and this is why you like to start, with a fresh palette. I'll get rid of the TAS market profiles for right now. There you go, just each day, just start with a screen. Start with a fresh palette and then begin to add the tools and then see what kind of meaning it has for you. So in this case here, if silver breaks below that trend line, that's going to be trouble. In my opinion, that will be trouble. That'll be sending us a message that, what's going on? Now, the question that, and one of the reasons that Mike had asked about what's my thoughts on gold and silver was because of what's going on inside the U.S. dollar index. Now, I had the U.S. dollar index down earlier, so we've seen a big change here. Is this it truly is to the upside? No, it can't be. Maybe I've got the wrong contract up there. That's what it is. Let me come over here and let me take a look at let's take a look at the continuous contract. Yeah, I'll change that out during the break. When we come back, we'll go see how these markets are going to drop, whether they're going to pop. We'll go back. We'll take a look at the currency market. Anything else that you'd like as well. 877-927-6648. This is Steve Rhodes. We're percolating, baby. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got the Dow off 80 points, trade at 17,102. S&P down 11. Trade at 1978. Composite off 30 points, trading at 45.75. Russell 2000 down 5. She's trading 11.35. Gold up $4. Silver back 26 pennies. Light sweet crude off $1.84. Moving to the upside, we've got the direction share daily Russell Bear up 25% out there. Salix, that thing's been on fire, obviously. Salix Pharmaceuticals, that's up 4%, up $4 and change. Boeing BA is the ticker symbol, up a couple of percentage, up $3. You got Randgold Resource up a couple of dollars out there. GLD up $1.95. Shire PLC up $1.66. Rio Tinto up $1. Grubhub up 79 cents to the downside. Leading the charge, Illumina Inc. She's off a little over 2%, down $4. Alexion Pharmaceuticals off 4. Agios Pharmaceuticals off 4. Visa down 4 points. Amazon up $2.5. Celgene down $2.35. Harley Davidson the hog. It just vanished from my screen. It was to the downside. Okay, let's go back and take a look at. So we'll try to do things simultaneously here. Let's go back and take a look at what's going on inside the currency market. Let's go take a look at, I'm going to go switch over to the futures contract only since there's no delay on my data feed here. So it gives us roughly the same thing. We take a look at the futures market for the euro. What we're going to find out here is you can see a nice wide-ranging bar thus far this morning. As we take a look at it, it's really getting back. It's making 100% move. That's getting back here to the swing point from November the 19th. What do we know about the euro? Well, we know, number one, that back here on the trading session of December the 10th, it broke through the trend line, came back inside it on the 11th, and the 12th on Friday, got back above it. We now have a short-term change in trend for certain with regard to the euro. Its next level that's going to find, we're going to look for resistance. So as long as the euro moves higher, that's going to put the pressure on the U.S. dollar index, and that's going to move it to the downside out here. The next level of resistance inside the euro probably today comes in right around the $1.26, 1.26. Level out there, your 1.2530 as we speak right now. You break above that, you will have broken a second trend line. The sphincter muscle on the shorts inside the euro, well, that's going to take place here when we see the euro move back above the 128 level. Is that likely to happen? I have to say yes, unless Mr. Draghi actually really does do what he says he's going to do. He hasn't done it for years, so why would anybody believe that he's actually going to do it this time around out there? But that's what's going on inside of the euro. That's one of the things that's having an impact inside of the U.S. dollar. But the Great British Pound, which has been just kind of sitting dormant along the bottom, trying to make some kind of a move today. But the move here is still just really the sideways move that's out here. We had that hammer candle that had formed all the way back here in the trading session of November the 14th. We've seen price basically just trade with inside a box out here. We've seen bulls rush in every time that these lows. So that low here in the 155.89-ish range, that is being held as a good level of support. But nonetheless, you've got the pound that's trading to the upside here this morning, that too putting pressure inside of the U.S. dollar index. Currency-wise, if we go take a look at your friend and mine, that is the Euro-Japanese yen. She's saying not so fast. She now has broken the, that 20% retracement. We've watched how this is. Let me turn that off here because that's no longer anything we need to pay attention to. So let's undecorate that portion of the chart. What we're likely to see here inside the Euro-Japanese yen is moved down to about the 143.81 level. There is the 0.382 retracement. Now, this currency pair, as we take a look at it, coming off of its low, the same low that we look at inside our marketplace, October 16th, to the high that was put in. Again, the same type of high out here that was on December the 8th out here. What we'll see is this currency pair. Remember that rubber band? This currency pair so far in backing off is stronger, less weak than the E. It actually looks more like the NQ out here, but actually even stronger than that as we speak right now. Nonetheless, it's very likely that the Euro-Japanese yen ought to make its way down to 143.81. Until this currency pair actually finds a bottom out here, that will put liquidity, that'll put some pressure inside of the markets out here, the U.S. markets. Let's go to our man, K. Rico, in Pompano Beach. K. Rico, hey, first, belated happy Thanksgiving, happy holidays to you. How are you today?
Thanks, Steve. Same to you. Doing good. I'm just still healing and getting over another operation and feeling my oats, starting to feel my oats.
We love it, and so we everybody's sending you some white light and well wishes out there. So we wish you a great 2015, and thanks so much for joining us this morning. You wanted to take a look at ticker symbol NBR, is that correct?
Yeah, Nancy Boy Roger.
Okay, tell us what you're doing with Nancy Boy Roger.
Well, here's a two-part what I'm doing. I'm keeping my eye on, I'm totally flush cash, feeling very fortunate. I like the oil and exploration companies for the future. Right now, obviously, oil's dropping very slowly but badly for oil exploration companies.
Yeah.
I think, just like I'm looking for the strongest shipping company for the future, I'm also looking for the strongest and most possible best ride for the future in the oil and exploration company area. Because it's just like, Steve, when Ford Motor Company in 2009 got to $1.50.
Yes.
I mean, I really personally, it's not like I know that much. I'm just trying to study and be prepared. Because just like we have good times, I think that the oil and exploration companies are showing they are headed for seriously bad times or bankruptcy. Mm-hmm. And the same with the shipping companies. Look at dry ships. Oh, my God, it's under $1. Mm-hmm. I don't know how to, other than to explain in my mind that Look for the companies that are going to be the survivors of all of the terrible financial problems that are coming most of their competitors' way. Who's going to be the final one to make it, and then start from there in investing?
For sure, for sure. So, Neighbors Industries, is this a company that you filed for a while, or have you pick this out as one of the? Obviously, I'm thinking you've picked this out as one of the stronger candidates. You believe?
Yeah, I picked it out as one of the stronger competitors in their field.
Okay.
And that's really it. I mean, but looking at their high and low chart, I've got the information right here. I mean, they're like everybody. They're getting crushed.
Well, they are. They're trading back into, to their 2001 level back in September in 2001. And so that's $9. You're trading inside there. You're trading inside there with volume. The swing point prior to that at that same level, that took place in March of 2009. I would say you're trading into that with volume as well. That had 172 million shares down there, and that low was $8.25. So you're at 1022, and I would say patience is the name of the game. That's just looking at the monthly charts to get a feel for what's going on longer term out here. If you do see some type of reversal, what I can tell you is that each time that this entity has moved down to this level, it did show up with a bullish reversal signal. In October of 2001, it did that, as well as in April of 2009. And then it seems like what you would get out of this trade. Let's say that you're able to identify the bottom, scale in however it is that you do it. It's a nice move, as you're pointing out, because it would look to me like what this has done in the past pattern behavior says that it starts to run into some real resistance around $30. Doesn't mean that it can't get higher, but that becomes a pretty good, decent resistance level. But nonetheless, you might be looking at an $8, $8.50, $8.25, something like that price stock to maybe make a longer-term move up to $30. Yeah, I can understand why you're looking at something like that. If I look at their daily chart just to see, is volume picking up? Is it, it's not. It is sort of picking up. The candles have gotten pretty small down here, so you've got some fairly narrow trading ranges. I'd say I would just pay attention to that longer term, the monthly chart, to know that it's trading inside a couple of swing points, what looks like with volume this month, and suggests that maybe it gets down a bit lower. You mentioned dry ship. Yeah, please. Yeah, go right ahead. Go right ahead.
Because of how the price of these oil and exploration stocks are really lining up how price of the West crude and the WTI and all that price per barrel of oil. Since the July 20 high, everybody's gone in the same synchronizing the slow but sure drop. My feeling from all I have so much time to research, Steve. I'm not working at all. I'm just recovering. I'm doing the best I can to get healthy again. I've come to the conclusion after all the research that I think we're going to see $40 to $45 oil price tag. That meaning the oil explorations, all the big companies, the oil companies, they're going to all keep diving slowly but surely.
Well,
so around $40 is when I'm going to say, okay, maybe we bottom the price of oil.
Well, I would say that right now you've got light sweet crude trading down to 54 1/4. Its swing point from January in 2009, the top of which, and I've got a quarterly chart up on my screen. So the top of the quarterly chart is $54.66, $50.67. So we're already trading inside that. $54.66 is the high. We're trading at $54.28 as we speak right now. At $50.67 is your natural Fibonacci 0.618 or 0.786 retracement level. So I would concur with you, and that is that if $50.67 gets taken out, if price doesn't close back above that quarterly swing point high out there at 54.66, that the light sweet crude will continue to move lower. Now, this would say here, just simply looking at the quarterly chart, this would say that $33.20 is not out of play. So you're using $40, 44. Let's not split hairs here too much. But I think what we're both saying is that if a couple areas here continue to get breached, we're looking at even lower prices than what I think most folks are even suggesting. So I agree.
And the whole economic picture of the domino that I'm also looking at is the fact that the break-even point for all the guys in the North Dakota and those other states that started doing fracking in the last decade, they're underwater now. So that's going to be a terrible scene for the economy of those states because, they're going to shut down the wells because it's a losing money proposition.
Well, I haven't. You've read up on the frackers. I have not. It's my understanding. So, but I'm a businessman, so I know enough about business, and so maybe they just simply shut down operations until it's not that difficult to get things started back up. I don't know the answer to that. Maybe they don't shut down operations. Maybe they're business owners. I don't know what their balance sheets look like. To my knowledge, it's been heyday. So the question becomes, what have they been doing with all that hay? Certainly they've been out there raising capital. So the question is, can they service the debt? Can they service their debt with the retained earnings, with what it is that they have on their books? So I hear a lot of folks in the media writing off a lot of those companies, but my question is always, well, have you looked at their balance sheet? Because if you haven't looked at their balance sheet, how are you even reaching those conclusions? And I haven't. I just know that would be the first thing that I would do. I'd go look at the public companies. I'd go take a look at their 10Qs or 10Ks. I'd go take a look at their MD&A. I would understand, what's going on project-wise or obligations. I'd really look at debt service first, right? If you have a problem. Now, just because maybe you can't service your debt, that's not necessarily going to be a game changer because you can go out there and you can renegotiate the debt. You can just pay interest only, right? I mean, there's ways around that. Some of these companies may be flush with cash out there, and they don't necessarily they don't shut down operations. They just make some changes out there. Maybe they sit tight for a month or two because they say it's going to be more costly. Somebody will be crunching the numbers. They'll be doing a spreadsheet. They'll be saying, if we shut down operations, we know that here's what we're going to lose out cash flow wise, what it's going to, what did it cost us to get all these employees, what are they going to do, so you have to make those kinds of intelligent business decisions out there. If you've got companies that just rolled the dice and they didn't do anything with any of the profits and the cash, then those are the ones that will fall like dominoes first out there for sure. But because I haven't done the analysis, I very rarely do I pay attention to what the folks might say, inside CNBC or Bloomberg, because until somebody comes out there and says, hey, here's company X, here's their balance sheet, here's the real problems that they have, I would just do that work myself.
Yeah, I understand. Again, it will be the survival of the strongest and the financial spread, bottom line financial spreadsheet, the strongest in the positive, but also the factors that I'm looking into and studying and learning from guys that are way above my pay grade are the geopolitical scenes that are happening in Saudi Arabia, because they are doing their utmost to continue to hold the line and to keep pumping more oil at a cheaper price, because they can afford to do that while they're hoping that they can hurt all these new fracking companies all over the world.
I disagree with that conclusion, but I do believe they are doing their part, and they're holding up their end of the deal that they made with the current administration. Steve-O, if you want, you can stay on the line when we get back from this break out here.
Yeah, I do, because that part curiosity, I'm curious.
Okay, no problem. We'll be right back, folks. Dow's off 23, S&P down 3. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. An $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial tools, the trader's edge, next on TFNN.
Welcome back, folks. Let's see. We've got the Dow. Let me see. What is the Dow doing? The Dow's off 27. S&P down 4. Composite off 15. Russell 2000 is positive right now. Steve-O, you on the line still? Okay, Rico, you there?
Yeah, 10-4, I'm here.
Okay, good. Okay. Here, I'm going to put a chart up on my screen that just take a look at empirical data and believe that there's no coincidences in life. If I take you back to the MH17 crash, that was when the Russian rocket, took down that Malaysian air. That took place, I believe the date was July 17th. Now, oil light sweet crude had made a high June 25th, as you pointed out. And that high was at 102.53. Wasn't really much of a back off in light sweet crude, just kind of normal stuff as we speak through that July 17th time frame. Of course, then it was European and U.S. Leaders that got together and continued to say, hey, we're going to go ahead. Now it's gotten more serious. So it's gotten more serious, and we're going to go ahead and we're going to put some more sanctions out there. Now, the sanctions at first were just simply sanctions on oligarchs and things of that sort. But, behind the scenes, there had to be something else going on. Okay, so they start putting those sanctions together. One of those sanctions from an economic standpoint is how can we drive the price of oil lower? There's different tools and different ways to do that. Then all of a sudden on August 19th, I believe that might have been the first ISIS beheading of a American individual, Peter, I don't know his last name, Kasich. Huh? Kasich, okay. That takes place on August the 19th. Light sweet crude at that stage is at $93. At that stage, that's when all of a sudden things get really serious, right? So they get really serious. You got your current administration, which includes all the intelligence agencies, everybody, okay? Everybody out there saying, okay, we now need... So you still got the Russian situation going on. You've got this other stuff going on, with regard to ISIS. What is it that we can do that really puts pressure on everybody? The U.S. is out there trying to assemble a coalition of forces, but yet the Saudis, to a certain extent, they've got to kind of remain somewhat neutral, but they've got to, they're playing both sides of the fence. So what's the one deal that you could take to them? Here's the deal. We're going to go after these ISIS guys. We're going to have some limited boots on the ground. We're going to have special forces, and we're going to go ahead and we're going to bomb the heck out of them. And your role, you're going to help us out on the other side. So for us doing that in your neck of the woods, you guys are going to help us push the price of oil down. And what is that going to do? That's going to go ahead and put the noose around Putin's head. If you take a look at the timing of that beheading, we take a look at the price of oil, we can see that at that stage, that's when the serious move to the downside was. Then you get that G20 meeting. I think that was in Brisbane in Australia. You see that additional push down there. That had marked a high. To me, this is nothing more than, and you're talking about a commodity that is perhaps the most manipulated commodity that is out there, the one that actually could be controlled. So from my standpoint, that's why I've suggested to folks, man, maybe you just kind of stay away from this commodity here for a while until you let geopolitical things maybe cool off. I have no idea if I'm right about this. But it's my theory. It was my theory when light sweet crude was up at the highs back in June of 2014. And I wrote in my newsletter a little bit about that theory. I even talked about it a bit on the air, that this would be a weapon of financial destruction for Russia. Now, the problem is that there's always unintended consequences, and I don't know what they are, but you've got a lot of folks that are probably on the wrong side of the trade right now. So, Steve, I wish I had more time. I wish I had more time. I didn't realize I was taking up the entire segment with you, but that's my
great
theory.
Talking to you.
Hey, you bet. Thanks so much for listening. Folks, have a great Tuesday if you're out to start your day. If not, stay tuned for hour 2 of The Trader's Edge. This is Steve Rhodes, TFNN. Have a great day, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.